Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Wednesday morning edition of the Daily Market Commentary. It is a wacky Wednesday, hump day, FOMC day, whatever you want to call it. We could have some wild and crazy market moves, or who knows, the market may not move at all. But either way, we got to go into it prepared. For those of you new to the channel, we're going to look at 10 to 12 futures markets, identifying educational examples of both breakouts and reversal trades. If you are new to the channel, click that subscribe button so that you get the updates as we do these videos. If you are a regular viewer, welcome back. I'm glad to see you. So let's dive right in. So the S&P this morning, we are up about 21.5 points. So we're definitely gaining some ground in the overnight sessions. However, we didn't come down to this 2500 area where I said is the only place that I would look to do much buying. Yesterday I had talked about the potential for price to rally up to 2600, but we didn't quite make it up to there for that reversal. So right now, what am I waiting on? Well, right now today we've got the FOMC announcement coming out, and so with the FOMC announcement coming out, I'm going to be very hesitant to do really much of anything. And we crawled up overnight. I mean, look at the size of our candles intraday. And then look at what we did overnight, and we just pretty much sold off all day yesterday. From this high of about 25.76 and as low as 25.30, so about a 40-point range that was there yesterday. I got to tell you, we're going to be right in between 25.50. My guess is that up until the FOMC meeting that we stay relatively flat and we don't do a whole lot of movement. I think that there's a strong possibility in my mind, we could go anywhere between 2,600 and 2,500 today. And I'm not sure exactly where that's going to be. So what I'm not going to do is try to trade the breakout on an FOMC announcement, because I was talking to Eric Ochotnicki last night. For those of you guys that were on our YouTube live session, Eric and I, Eric said he wouldn't be surprised if there's a face-ripping rally, and then the FOMC, the Fed, kind of bends at the whims of the market. We get a face-ripping rally for a couple of days, and then we close on the lows of the year. Which would be an interesting thing, because if when you look above us on a 4-hour chart, I mean, all you see is supply, 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 supply. There's tons of supply up above us, and then the demands are getting pretty thin, right? There's not a whole lot of demand. So I am of the belief like this, and this is what I will continue to believe and say, especially on the 4-hour chart. I am treating every rally as an opportunity to get short until we have proven on the 4-hour chart to have put in a higher swing high and a higher swing low. Now, what does that mean? Well, that means that I caught a little bit of this move up here because we got a higher swing high and a higher swing low, but I didn't catch all of it, no doubt, and I was a little late to get back in on this move down. So what that means for me is that I'm going to use the 4-hour to tell me, am I a buyer or am I a seller? And very rarely am I going to go against that. You will find that will keep you out of trouble in most instances in the world of trading. Find your big picture, decide, am I a buyer or am I a seller? And then go to the smaller time frame to identify where to actually enter that position. So for now, there's nothing I'm going to add to the S&P or to the Nasdaq. Neither one are giving me enough of a symbol to get in. And I'm saying there's nothing I'm going to add. It doesn't mean that I'm going to take anything away either. The levels that I have in place are still valuable levels. We're just in the middle of both of them. So what I don't want to do is go out there and just create and just put a level in for the sake of having a level. I'm going to leave these both on here. They're fairly wide, but I'm going to stay away and be a little bit more cautious. Crude oil. So our crude oil breakdown is working very, very well. I'm going to remove this one. For those of you that caught that crude oil breakdown, then you're feeling good. I will say that I think we're putting in another opportunity to catch a breakdown right through here. And this is the way crude has been running for a while. It's really just been playing breakdowns. there's been no true reversal opportunities. However, and I'm also going to add this area here for a potential reversal. However, the thing to consider is I don't want to take breakdowns right in front of announcements. I want to use the announcements as catalysts to drive me into reversal areas, but I don't necessarily want to take a breakdown directly in front of a news announcement. So that's the area I would look at in crude. In gold, our level never touched and never met entry. We are getting a bit of a bounce here below 1256. So if we get a little bit more bouncing there, that could be a good opportunity for a strong rally up above here. That levels I've had that breakout level in place for a while now. In the bonds, the bond breakout did occur, and it's technically not broken below our prior pivot to hit our stop. However, we got the breakout 1, 2, 3, 4, 5, 6. It's kind of just dead, right? So I am not a big believer in holding on to something too long. If it doesn't start working immediately, it's probably not going to work. Now, it still may hold out. So I'm going to remove my line. This position is not one I'm interested in being in any longer. Your risk tolerance may be greater, and you may be willing to stay in it longer. If you are, great, but that's part of my plan. If it hasn't moved in 6 candlesticks on my entry time frame, I'm out. In the Aussie, oh, this is so frustrating. We just got nicked by a tick. I mean, price came super close to the area, did not get us filled. This is that wick over wick resistance that I was talking about yesterday, and it came super close. I mean, 7213, and our line is at 7214. So this one will not have gotten you filled. And now that we've just kind of based well below it, the level itself is not completely dead. However, I'm certainly going to convert it to a confirmation style entry just in case we get into it. And even at that, I'd really want to make sure that we don't just base below it, because this is now setting up actually for more of a breakout style than it is anything for a reversal. I will keep it here for now, but that may change throughout the day. On the euro, we're getting a very strong rally up. When I look at this on a 4-hour chart, there's still room to run until we get to this next area. So where is there an opportunity on a pullback? Now, once again, the currencies also can get pretty volatile right around FOMC announcements. And so when I look at this on a 1-hour time frame, this was our 2 o'clock reversal. You know, I'd have to come all the way down to here now as my best area, and even this isn't fresh. It's already been hit once by this wick right here, so we came out of there. But so unfortunately, it's not giving me a great opportunity to get back in on the hourly chart. I need to move to a smaller time frame if I want to see a shot to re-engage. And I guess it would be down here where this little gap occurred. We had that little bit of a gap in there between our 3:30 and our 5 o'clock here. So there is, I guess that would be your best opportunity, would be this this gap fill area here on a small time frame. Okay. Next, Canadian dollar. So in our Canadian dollar, yesterday we talked about a breakdown, and that's exactly what we got. Very strong breakdown in the Canadian dollar. This moved down really nicely. Hopefully you're able to catch some of that profit. Now we're starting to come back up, and we have put in 2 higher highs and a higher low. So, right, it's higher swing high. You know, by getting higher than this candle's high, we've put in a higher high and we've put in higher lows on our small time frame. Doesn't mean that I'm still not willing to be a seller based on my 4-hour chart. However, now I would look for it's got to have a higher probability reversal, and so I would look for a potential reversal trade, and we may get a reversal at the origin of our breakout. So now you can wrap your lines really around here for a potential breakout trade. Now, unfortunately, I'm not getting a great reward to risk scenario on this, so I'm going to put a confirmation style entry on it just in case.
Great British Pound, Japanese Yen. We didn't come close on either one of these yesterday. Price, you know, we're still kind of in between the areas here. I don't really want to add much to either one of these. I feel good about the levels that are around them, and I don't want to force levels in between. Nat Gas did hit our little tiny area that we had talked about yesterday and has started its move down. So, you know, this would be that first target on Nat Gas if it comes into here. And so that one has begun its move down. And then copper, we have, you know, really sold off out of this 4-hour level. Let me put it back to the 4-hour. You can see we're in a kind of that 4-hour chart where we had some sideways basing. I think that there could be another chance at a reversal up in here. When I go to the 1-hour time period now, I would look at this area right here as our next opportunity for a potential reversal. All right. Thanks, everybody. If you have any questions, please feel free to send me an email, support@tradersarmy.com, and I will see you soon.